The stock market is a bizarre environment. It's unpredictable and full of surprises, so you never know what will come next. I'll discuss why Tesla stock will shortly approach $400 in this video. Many people are concerned about the stock market and the viability of investing in Tesla. I'm here to assure you that Tesla is a fantastic business and that their stocks will rise in value. Tesla's invention is one of the key reasons why it's succeeding so well. They are continually developing new technologies which are altering how we view transportation. Additionally, compared to conventional gasoline-powered vehicles, their automobiles are a lot more efficient. Hey guys, welcome to Investor Facts, where you may learn about investing and how to make the best financial decisions for your life. Elon Musk's controversial moves last year were a major factor in the decrease in Tesla's stock price. The desire for the car company's vehicle was and remains a source of worry. According to certain investors, demand is declining, particularly in the critical Chinese market, as a result of future price reduction for the EVs there. Additionally, in other EV markets, is Tesla truly having a demand issue? Now let us discover more. Tesla built and delivered more than 405,000 automobiles in the fourth quarter of 2022. Vehicle deliveries increased by 40% over last year to 1.31 million, while manufacturing increased by 47% to 1.37 million, based on the automaker. But according to a FactSet compilation of Analysts' predictions, Wall Street was anticipating Tesla to announce deliveries of roughly 427,000 in the year's final quarter. The estimates that were updated in December varied from 409,000 to 433,000 and contained the FactSet consensus. After the disclosure of Tesla's Q4 delivery and production figures, a number of commentators asserted that the declining demand for Tesla vehicles is now more obvious. With increasing production rates in the upcoming quarters, Brett Winton, head of research of ARK Investment Management, said that instead of Tesla's Q4 stat being groundbreaking, they might propel the stock price to reach as high as $400 this year. Despite the decline in output at its Shanghai factory in China, Tesla experienced a record-breaking fourth quarter. According to an internal notification, the automaker stopped manufacturing at its Shanghai plant in December, implementing a prior plan to halt the majority of activities at the factory during the final week of the year. Tesla had canceled a morning shift at the facility and told employees they may begin their break, despite the fact that it didn't provide a rationale for the move. Tesla's most effective manufacturing hub, and eventually its exploitation hub, is Giga Shanghai's, as the carmaker makes cars for market around the world, particularly in Europe and Asia. Therefore, a production halt would have a big impact on output in the final quarter of 2022. If this hadn't occurred, there would have been more deliveries, and Tesla probably would have had growth of up to 50% on an annual basis. Additionally, Tesla intended to continue the decreased output it started in December by operating a reduced production schedule at its Shanghai factory in January. The automaker's February financial results in China have been released, and they show that the Gigafactory in Shanghai continues to produce an outstanding 600,000 or more electric vehicles annually. Brett Winton, though, thinks that production, not demand, determines whether Tesla achieves its growth target. Without a doubt, Tesla's demand may be declining as EV customers may not yet have realized that the tax credit on some of their vehicles played a role in their decision to purchase. However, this will soon pass given the numerous price cuts that Tesla is implementing in the majority of its markets. Therefore, given the price drop, it might be more cost-effective to purchase the car now instead of waiting for another incentive or for Tesla cars to qualify. Deliveries of Tesla vehicles are merely one indicator of the company's financial performance and should not be used to predict quarterly financial results, which depends on a variety of variables, including the cost of sales, the state of the foreign exchange market, and the mix of vehicles that were directly leased. Winton asserts that Tesla is leading the industry in the shift to electric vehicles by at least 3 to 4 years, and that the automaker will likely continue to reduce costs even as it increases production. In the years to come, they'll also be introducing new models and goods. It's possible that Tesla could soon be able to sell every vehicle and item it produces. Additionally, the company plans to unveil a new vehicle architecture that will cost approximately half as much as the Model 3. Even though the project has been postponed and may not arrive for the next few years, there is a great deal of anticipation about the new platform, which is anticipated to be a 25,000 EV. Musk said that the next generation platform will be half as expensive as the Model 3 and Y platforms now in use at Tesla during the company's Q3 earnings call in October last year. Although it's uncertain that the EV will be put into production, Musk also stated that production volume for this car will hugely overtake that of the Model 3 and will far exceed any other Tesla vehicle manufacturing quantities altogether. He also said that he's going to utilize the full potential of production enhancements like GigaPress, which casts large chassis section in one piece. Tesla has also declared that it will have a new investor day on March 1st and has already begun making preparations for it. This is where the new vehicle platform will be covered. In a new statement announcing the occasion, Tesla stated that it would shortly have its 2023 Investor Day and that it would be broadcasted live from its Gigafactory in Texas, with some of its institutional and retail investors having the options to attend in person. The automaker claims that investors will be able to see its most cutting-edge production line and speak with Tesla's leadership team about long-term expansion plans, the Generation 3 platform, capital allocation, and other topics. The automaker noted that during the Investor Day, it will discuss capital allocation and might potentially bring up the stock repurchase plan that Musk had previously disclosed in October. According to Brett Winton, Tesla will once again set the bar for the EV market if it can successfully deliver this affordable EV. The Tesla Ball had openly mentioned innovation and how it may provide its businesses with significant competitive edge. He also emphasized the parallels between investing in emerging markets and current innovation. According to Winton, there's a lot to anticipate from Tesla in upcoming years, and these developments may ultimately boost demand for the automaker's products and the value of its stocks. Winton believes that it will be extremely beneficial for Tesla if it can accomplish full self-driving, due to the fact that the automaker would probably produce the Club in China, one of the world's largest markets. At the end of the quarter, there were more cars in transit as a result of Tesla's ongoing shift towards a more regional mix of vehicle construction. Despite current difficulties, Tesla may soon increase output at its Shanghai factory to more than 1 million units per year with upcoming improvements, and record even higher production rates due to the stepping up of its facilities globally. We sincerely hope that you enjoyed our video and will think about buying Tesla shares. If so, kindly click the bell button and subscribe to our channel. We'll see you again.